Most businesses never make it to seven figures, not because they lack ambition, but because they lack leverage. This is the 789 Show, where we break down how founders scale from 7 to 8 to 9 figures in revenue. I'm Kay Mikishi, and in each episode, we go inside the decisions, systems, and strategies that actually drive growth from operators who are doing it in real time. No fluff, no theory, just what works. Let's dive into it.
Ivest is a private equity fund. We manage over $500 million. We have about $1.5 billion in retail sales with our portfolio. And most popular, we own CloudCo, which is the company that owns Care Bears. And everybody knows and loves Care Bears. Care Bears is a story about overcoming challenges with love, caring, and sharing. And that's our brand motto at Ivest.
Can you share a little bit more about your specific role and how it fits into the bigger picture at Ivest?
Sure. Well, we're a consumer investor, but we really specialize on licensed consumer products. So when you think about licensing, it's something that I think a lot of people aren't that aware of, but it's a $369 billion industry, almost double digits. And in some categories, sports and sports licensing is 20%. So it's exploding. And so licensing is an interesting category because you can create your own brand, you can have a store brand, or you can license someone else's. And this is something that we're specialists at. Our team is the former Warner Brothers team that really built up the Warner Brothers global consumer product licensing business. So we have a long history. We have an incredible global relationship base. And when we look to partner with companies, we often bring retail relationships, licensing relationships, as well as consumer brand, digital marketing experience, and so forth that really can escalate growth.
Amazing. What are some major shifts that you're seeing in the market from, let's say, 10 years ago versus now?
Well, I'll tell you, licensing in itself as an industry has grown tremendously, backed by the Licensing Trade Association called Licensing International. This group has now got conferences in Dubai, Tokyo, London, and there's one coming up in Las Vegas, which is attended by thousands of people. That includes the IP owners like ourselves, Care Bears, as well as thousands of manufacturers that make all those great products that have Star Wars and Marvel and all those kinds of things on it. It's a great opportunity for companies that are looking to expand to get together and listen. The industry is huge, really dominated by character and entertainment licensing, which you might think about Star Wars and Marvel and that sort of thing. That's kind of the major category, but sports licensing is the huge breakout. So think about NBA, NFL, those brands and branded products around that. They're having double digit growth. They're 22% so far this year. If you look at consumer as a whole, really the breakout exciting thing that's happening within consumer is licensed product.
Yeah, but since you're the expert in really specializing in this, how is that different from, let's say, any other types of licensing? Why is sports really taking off now? And in what sort of product category do you see a lot of traction?
Well, yeah, the sports licensing represents $40 billion in licensed products. So it's big. I mean, global fandom distribution is what it's all about. I mean, people love the brands. They love associating the value connection that's going on. I think there's a lot more awareness. I think distribution has improved. So teams are realizing that, you can sell your products at Walmart, you can sell it at Target, Costco, Amazon. I think also gaming is huge. When you think about like online gaming, and there's a lot of activity around collectibles, and there's the global audience is growing. At Ivest, we're underwriting a focus on durability of the engagement. So not seasonal hype. We're looking for durable cash flow. And I'll tell you, the collectibles, the fans, the fandom category is super hot. This is where Ivest really stands out as somebody different. I mean, there's a lot of private equity funds and they all have capital, but if you're just selling your company, 100% of it, we're probably not the right partner. But if the founder is looking to build the team out, scale, that's where we really stand out because we have operators, people that have an incredible track record in growing licensed product companies. And when you think about it, there's two different types of investments we make. One is licensed product manufacturers that license other people's brands and IP. And then there's the IP holders, and we're on both sides of that. One of our most successful recent investments is in CloudCo. CloudCo is a content IP producer So they own the IP, and they own the IP of a nostalgic brand that has had an incredible resurgence. Care Bears that I mentioned. Now we've had Care Bears for about 2 years, and in that time we've tripled their royalties business. And that is to say that we found great partners that can manufacture high quality, interesting consumer products that retailers, appreciate, and consumers in particular are buying like crazy at full margin. So that business has exploded and continues to explode. In fact, the whole adult and nostalgic brands is really on the rise, and I think that's just exciting for us. So, CloudCo has been an exceptional example. Digital marketing, again, if you look at the brand numbers, you look at what we're doing in Asia there, as well as Europe and South America, it's fantastic. Um, Another example would be Paladone. Paladone is an exceptional licensed product business that's really big in the category of lighting and drinkware. You'll see it products represented in brands like Star Wars, obviously Warner Brothers, Disney, and other fantastic brands where products are supercharged using, brands that people love and that represent who they are.
How do you apply royalties and what does that look like into the sports category? Or how does that royalty game play within sports?
Sure. Well, you're right. I mean, I think anybody who's famous and built a personal brand, they're looking to monetize that brand. And the best way to do that is through licensed products. There's a lot of examples of sports stars that have invested in multi-unit franchise, as well as YouTube influencers. A really interesting character is Mr. Beast, and he's selling food. He's in multi-unit franchise food. He's in consumer products, and he just invested in a online banking business. So he's monetizing his brand in so many ways. In sports, you can create product companies, and essentially the royalties aspect to it all comes back to lending the brand to someone else who manufactures the product as opposed to owning the manufacturer. So in that way, they're just paying you royalties, and that's a exceptional business. And we understand that in depth. If you're a licensed product business and you're looking to expand, we have the relationships both with the YouTubers, with the, TikTokers, the athletes. One of my partners used to be chairman of the Grammy Foundation, the music awards, so we have access there. Also with Warner Brothers, Warner Brothers' challenge was, we're making these great movies. How do we make more money out of it? The Harry Potter example was way before Lego, way before Marvel realized that, what Harry Potter was, a great movie, but with tremendous opportunity with consumer product brands. And that turned into a multi-billion-dollar royalty stream.
What's working well for you right now in terms of as a, PE fund and looking at your portfolio, managing it? You mentioned growth. How are you partnering with these companies to grow their markets?
Well, what's really working well is zeroing in on emotional connection. We're not creating products and making money. What we're trying to do is connect people with the feelings that they had when they enjoyed the content, whatever it is. So if it's a movie with Lego, people like to express themselves by purchasing something that they can touch and feel that reminds them of that great experience of that movie. And so it's all about emotional connection for us. And the way we invest, well, obviously we invest in great management teams, and we're looking for capital light businesses, royalties businesses, like you mentioned, and places where the IP really does have a value and emotional connection with people. What is a brand? A brand is a relationship. It's a feeling. And whatever you do, you tend to stick with brands that you feel good about. And we're monetizing that at Ivest with our investor capital.
So the emotion is sort of the concept and the strategy, but how do you go about actually executing that?
Well, you know what a lot of people never think about is kind of a two-tiered approach to licensing. So I'm dealing with a cosmetics company right now that has some really great value brands that they've created. They do a lot of contract manufacturing, white labeling for other brands. So what I said to them is like, why don't you license your existing brands to adjacent categories? So they make makeup. So instead of getting into making makeup bags and brushes, why not license that to other people who are experts in manufacturing that? So license your brand. So then you go back to Walmart and say, look, we're already on the shelf selling our core product, which is turning at full margin really well. And we're partnering with these other guys to provide adjunct products for our category. So that is a low capex, low capital intensity expansion, low risk, and the royalties are 90-95%. So gross margin. So it's a great way to build on your EBITDA and cash flow. That's one way. The other is licensing other people's brands. If you're selling a product, you think about building a brand. Building a brand costs a lot of money. Social media marketing, sponsoring people, all kinds of things to make yourself relevant. What if you just rented the brand from someone else and someone else who has, the zeitgeist of humanity, it's in the psyche of people's minds, right? Like what they love and what they like at any given time. Brands are going up and down in terms of popularity. Why don't you just rent it while it's super hot? And then if not hot, switch and just, that's the whole thing about a licensing business. You have to be great at product development. You have to pick the right brand license at the time, to capture the zeitgeist of consumers. And those are the real keys to success.
What has been frustrating in terms of the growth for your portfolio companies?
Well, the big challenge everybody knows, COVID, came out of COVID, and then the shipping crisis, and then we got hit with tariffs. And we have a great strategy for dealing with tariffs. And thank goodness, looks like a lot of the tariff wars are over. Some are still hanging out there, but that's been a real impact to everybody in our business. But there are mitigating strategies because that's what drives the margins. People are willing, there is a premium consumer and they're not rich, but they're smart and they have a good job. And you know what? They're willing to pay premium for something that represents quality and their values. And that's really the part of Ivest's investor strategy that I think our competitors are not exploiting fully because they are too focused on mechanics and not on feelings.
And which metrics are you most focused on improving?
I would say the first thing we think about is top line growth. Second thing we think about is margins. And third thing we think about is EBITDA growth. Our investors want to see EBITDA go up, up, up. And that's where royalties is interesting because the gross margins are so high in royalties. So if you can create royalty revenue, that EBITDA trades at a much higher valuation. So you take a company that is just a typical, let's say, licensed product manufacturer, and then you try to create brands within that portfolio, and then you try to create royalties revenue within that. And what you get is cash flow that trades at a higher valuation. So what we try to do is invest at a lower multiple and create the value intrinsically in the portfolio company so that when we exit it, it trades at a higher multiple of EBITDA, but also growing the EBITDA and revenue. The first and only thing was as soon as we get involved with the company is of how do we grow revenue?
What's one thing, if you could wave that magic wand to kind of fix that thing that's holding your business back, what would that be?
Well, it's a great question. I would tell you it's this. It's important that everybody think like an owner. Portfolio company management team are employees. And one of the things that we try to get their mindset to change is think like an owner. When there's problems, EBITDA is dropping, business isn't going that well, it's just more work. And when you're an employee, that's what you do for a living. You work. Numbers going down is not an existential threat per se to someone who works for a living. For us, it is. As investors, it has to go up. So what we try to do is align with management to think like owners. And that's been a really key success for Ivest.
And how do you go about that and getting the employees to think like owners?
Okay, well, I can't give all my secrets away, but the secret is that we look at it this way. It's a 24 to 36 month disruption. When Ivest comes in, we make major operational change and it can get uncomfortable. And what I mean by uncomfortable is that when you're pushing hard and going, it's not as comfortable as just having steady as she goes. I got my tennis match tonight, my bridge lessons tomorrow. Sometimes it means odd hours. It means working harder and faster. We've only got 36 months to really churn and burn and make things happen. And so we take big velocity in the beginning. Typical private equity is 5 to 7 years, they say. For Ivest, it's a lot quicker. We like to get that growth coming right out the gate. And if it isn't happening within the first 24 months, we consider that a failure for ourselves. That's our goal. So emotional comfort, we are not interested in emotional comfort, people just feeling relaxed and happy. We want happy, but we want exciting and we want to go.
If you have one advice to our listeners, whether, fellow investors or, other entrepreneurs in consumer space, what would that be?
It's funny. You meet these private equity funds and they have 5 billion under management, 10 billion under management. You think, well, they must be successful. They've got all this capital. And you think about the money and you think, well, That's the most important thing. I want to sell part of my company. I need money. That guy's got money. What you don't pause to think about is how close and intimate that relationship's going to be with those people. And you never think about, well, let's check their references. Let's see what they personally did. What are they like to work with? That's the biggest missing part for people that are picking a private equity fund. You've got to get to know these people, how they govern, how they make decisions, what's it going to be like. And that again is where Ivest really is different, because we are operators. We ran businesses. The mindset of an operator is passion and inspiration. You know, people that build businesses, they inspire other people. People that invest, they don't show emotion because we don't celebrate emotion in investing. What we want is stoic predictability. And a lot of the personalities of private equity are like that. Those people are not going to help you build your brand. So again, a highlight of Ivest is we're operators. We're not squarehead financial guys.
Yeah. Amazing. Thank you so much, Sam. That was a really great conversation. So thank you so much again, Sam.
Yeah, I really enjoyed it as well and look forward to our next discussion. Thanks so much.